In this video, I'm going to talk to you about fundamental versus technical analysis, which is better. If you're probably at Boeing, you have some sort of disposition to kind of looking at these things from a technical standpoint, and people that work in the technical field look more into technical analysis than people in other disciplines. But right now, I'm just going to give you the rundown. Today, we're focusing on those two types, fundamental and technical analysis. I am going to give you a little bit of a story as to how I got into the world of technical analysis. In the late 90s, when technology starts coming up, we acquired systems that allow us to do technical analysis and backtesting. We got complex systems to draw data in and plot all that information to see how it would work. And we gained a lot of experience from that. And we came to a conclusion that I will tell you about at the end of the video. So let's begin. Of course, many of you are curious, how do I invest better? How do I make better decisions? And should I use technical or fundamental analysis? First, I'm going to start by describing to you what each one of those is about. Fundamental analysis is concerned with data such as earning per share, capitalization, company history, some cases management, growth, number of things. So you could do any other one of those. Is it good or bad? We'll see. Let's talk about technical analysis. Now, technical analysis is concerned with two things only: volume and price. So as long as the stock has certain volume, for example, and as long as the volume pattern moving a certain way, and as long as the price movement is moving a certain way in certain patterns, they look at those patterns and they make a determination whether the stock is going to go up or down, whether it's going to break out. That discipline has many ways. Through them, they determine where the stock is going to go from here. So if you're going to choose, you got to figure out where you're going to go based on your instincts and where you think you ought to be. I can tell you I've seen both, and I've seen them both work, but I've also seen them both fail. And that's where the problem lies. It's easy to think that there is a one big magical solution, but there isn't. So here's where caution must be applied. After extensive testing of both, I discovered that there's none of them has exactly a lock on what goes on. There's just no specific data that point to either one of those as being the ultimate decider of how things are going to go with your investment. So you remember when I told you that at the end of the video, I'll be telling you a conclusion that I have. I'm going to tell you what it is. And the conclusion that I came to is that it doesn't matter whether you use technical or fundamental, the result can be the same because the future is unknown. No matter how much data you base the assumption as to why you want to invest on, in the end, you don't know. Anything can happen because the future is unknown. And I know it sounds like a simple fact. Of course, all of us know the future is unknown, but it stands true when you analyze why whatever you do sometimes doesn't work. What we did essentially over the years, we started developing different kind of models to figure out how we can reduce that risk. And what we developed is an approach that could actually reduce the risk and create a better momentum for you. So if you have any questions, please don't hesitate. Give us a call. We will give you as much help as we can. Whether you want to figure out technical, fundamental, whether there's other models out there that can help you, we can definitely do that for you.